All right, the market is officially closed for trading. It is Friday, November 9th, 2018. We're looking at the 1 hour time frame. I'm going to review the number of pips we earned this week and the number of trades and give you a general outlook and idea of what we did this week on some currency pairs and how we ended Friday. I did make some videos where I started off shooting the video at the beginning of the trade or after we got into the trade, and then I've got some projected price targets, and then people want to see later on, well, how did that trade end? So I'm going to try to wrap up all of the trades for this week. We earned 420 pips this week, exactly 420 pips. We did not have any losing positions. It was a little bit, I can't say slower this week, but there was fewer trades than what I would expect could be potentially possible on a week like this. But nevertheless, I mean, they were all safe trades. They were good trades. I walked my coaching students through each one of these trades. The other thing to take into consideration, because I get this question quite a bit, they'll say, well, how many trades do you have usually in a week? And it's always going to vary. I have no control over it. I just follow along, watch the news, watch the charts, wait for my signals. So, if we have a week like this where we have about 11 or 12 trades, but we're making 420 pips, and this goes back to one of the comments that I make quite a bit with a lot of my coaching students, is that I trade a lot less today than I did when I first started trading back in 2001. In 2001, I remember weeks where I had like 50 or 60 trades in a week. I was just all over the place. I was scalping. I was chasing price up and down. And at the end of the week, I was lucky if I had 5 pips over what I started. I mean, it gets that bad if you don't have a trading system. But here, I can take 11 trades for the week, get rest, sleep. I'm not stressed out. I'm not exhausted. I'm not really babysitting any trades. There are some times when, it's necessary to keep an eye on some things. But on 11 or 12 trades and earning 420 pips with no losses, my coaching students are trading standard lots. That's a good week. That's an awesome week. Like, you want to get to that point. And but there are times when I know that there's going to be a little more activity in certain currency pairs or certain areas of the market, and I will trade or look at more than just the 6 primary currency pairs that I trade. So sometimes I'll be looking at the Australian yen or the pound Swiss, the pound yen, things like that. It just depends. And I'll cycle through, right? It really depends. Sometimes I don't need to look at them and I won't even bother with them. And then I just focus on the primary 6 currency pairs, because with this 6 primary currency pairs that I trade, euro dollar, pound dollar, dollar Swiss, dollar yen, euro yen, pound yen, and then I also traded the dollar Canadian. I do trade the dollar Canadian and the Australian dollar, but I just trade the continuation breakout strategy on those currency pairs. The others, I'm going to be looking for reversals. I'll be looking for, example, the HL30, things like that. But I do call out these trades in the chat room, and I'm looking at them. So sometimes my coaching students will say, will you take a look at this one currency pair? I know you don't always talk about it, but could you take a look at it? I like trading it, and I want to know what your opinion is. And then I'll analyze the charts and speak out my mind, what it is that I'm doing, trying to find a setup on that particular currency pair, and I show it in the chat room. So it really started off with Monday. We had some trades. You might remember, if you go back to the beginning of the week, I think on the YouTube channel, this trade's in here and a few others. I think there was another opportunity there on the pound dollar as well. So this was what I call a Tech 1 trade. And this Tech 1 trade pays really well. This was during the New York session. And I explained why, in most cases, I get a really good opportunity around the New York session. I won't get into the detail. You can watch that video. It makes perfect sense. There's obviously more volume, more participation. It doesn't guarantee or ensure that I'm always going to get a good opportunity during that time, but usually I'm going to get a good opportunity there. So that was a trade that worked out just fine. And then as we traded into the election this week in the United States, we had a couple of small trades during the election, had to trade carefully. I explained that it looked like it could have been a breakout move, but then reversed and went right back down and canceled out that breakout move. But we didn't go long. We didn't go long that pair because I anticipated this kind of behavior there. Taking into consideration the type of news that we were trading, it really wasn't like an economic report where the number that you see is confirmed, right? It's done. That number is in the books, and you can then trade it. In a situation like this where you've got an election and over the course of several hours you're getting updated information, it's likely to anticipate choppy behavior like this. There's going to be everybody's opinion in one direction, and then a few hours later that opinion will change, and then everybody sells it off, and then later on it goes right back up again. And that's exactly what we saw. That happens a lot with voting or elections, where again you're getting data over the course of several hours, and it can change. You got to be careful, and you got to anticipate that. That's trader psychology. That's the behavior that we're interested in identifying, and then technically looking for opportunities to trade around that or to stay away from it altogether. I'm not saying that I would have been perfectly happy not having any trades during the election if I didn't have any trades. That's the way I look at it. It's fine. We're always going to get opportunities. And then, of course, we had some reversals back up here to sell it back down towards the 40. There was a video in the middle of the week where I talked about this one. This is, again, the euro dollar. This is the 1 hour time frame. Some of these trades that I take, like, example, the Tech 1 trade and things like that, I will find opportunities on the 30-minute chart as well. And then there was a continuation breakout trade on Thursday that set up. The same thing set up on the pound dollar on Thursday. That one set up. And then it set up here on the pound yen, and then it also set up on the euro yen, the continuation breakout trade, about the same time yesterday, Thursday. So let's go through what happened here. The euro dollar continuation breakout trade. When I execute the continuation breakout trade on the euro dollar, it's a 55 pip target. And this one hit the 55 pip target. We talked about that. I actually have the video. If you haven't seen it, watch the part 1 of this, and you can see the trade there where we're taking it straight to the target. And I talk about how this morning in the chat room I had a few questions about, as it was approaching that target, what do we do? Should we close it? That kind of thing. And I explain my thinking behind closing trades when you're approaching the end of a trading week. Do you want to hold on through the weekend? That kind of thing. So there's a lot of important tips, I think, that I share that help calm my students' minds when they're trading and they don't know if they should hold out for more. Very often that's a pretty common, I know because I did it. A lot of us do it. I think every one of us does it as traders at one point or another. We start thinking when we're getting into a trade, especially a 55 pip trade, right? That's a good trade. Trading one standard lot, earning $10 a pip, that's a good trade. That's good money. So there's the temptation as it approaches that 55 pip take profit. What if it goes further? And what if? That's how I look at it now, but I didn't look at it like that before. I used to think, and I would panic, what if it goes further? I need more money. So that's what I'm getting at is today I don't look at it that way, but I used to. I used to lose a lot of money because I thought about it that way. Now, I'm not talking about an event where you can clearly see that it's going to go a lot further. That's not what I'm talking about. I'm talking about if it looks like it's going to bounce around like this and there's no other news afterwards and we're approaching the end of the week and it's likely to move like this, lock in profits, you're done with the trade. Even if it goes down another 12 pips or so, you're going to lose a lot of money trying to get every single last pip. It doesn't work. I used to get mad when I would get into my trades in 2001 and I didn't get every single last pip. And as a result of doing that, I just kept losing my trades. I was into good trades and I would be, making decent money on a trade. And then because I was holding on too long and I didn't know where, instead of following my plan, the whole thing would reverse and go back the opposite direction, and then I gave back all the profits. You don't want to do that. Just stick to the plan. When I stick to the plan and I close the trade out like this, I'm done, and then I stop looking. I used to continue to stare at it, and then I would just be upset, and I would say, okay, well, you left a lot of money there. You're an idiot. You got to hold on to these trades longer. Not true. Not true. If I've calculated correctly that 55 pips is the appropriate target for this particular technique, that's my plan. That's what I do. The fact that I can stick to this and do this and repeat this over and over again is what has kept me in this business 18 years. Had I continued to change it and always be looking for different targets and trying to squeeze out every last pip, I wouldn't be as profitable as I am. It's just a fact. So when I'm done with this trade and I hit my target, I'm done. I stop looking at this chart, and then I start looking at another opportunity, looking for another opportunity. That's the way you've got to move on. You're here to make money. You're here to get paid for the time that you put into trading. Lock in money. You've got food to put on the table. You've got bills to pay. You've got to make money, especially if you're making that transition going from a full-time job or running a business to becoming a full-time trader. You've got to stick to the plan. You've got to duplicate this. It's almost like running a business where you've got a procedure right? You've got things in place that you need to do. You follow a system every day, and that's what tells everybody what to do. That's what tells it's almost like a machine. It's a part of your business. You've got to stick to it. The same thing happened here on the pound dollar. 55 pips, hit its target, it's done. It's possible that it could go a little bit further. Sometimes they don't. Sometimes they drop straight to that 55 pip take profit level, and then that's it. They don't go a whole lot further. You've got to be careful with it. You can't hold on to these trades thinking, I want more, I want more. I want more too. I really do. I want more too. But I say this, is that if I want more, then I'm going to have to be aggressive, but not reckless. And what I mean by not reckless is, reckless would be changing the plan, changing the targets, hoping for more, all of that, and not locking in profits. Aggressive to me means if I want more, and this is as far as it goes, and it went a little bit further. Well, I'm done with the trade. Now I need to go look for another trade. If there is no trade, then I'm going to sleep. I'm getting my 8 hours. I'm coming back, and I'm going to do again. I'm going to trade it again. I'm going to start all over again. You don't want to trade when you're completely exhausted. It doesn't work. I know I talk about this a lot. I talk about it a lot because it affected me in a deep way. Like I traded to the point where I was completely exhausted trading around the clock Monday through Friday. By Friday, I remember, and I say this every once in a while, you might hear it in a video, there was a day on a Friday, I didn't have any open positions, but I was waiting for a trade. It was like 7 o'clock California time in the morning. There was some economic data that was already out of the way at that point, and I started hallucinating. I thought I saw a spider about the size of a silver dollar on my screen. It's no joke. And I sat up. I was blinking as I was falling asleep. My eyes were blinking, and I sat up and I tried to brush it away. And I realized at that moment how serious it was what I was doing. Like, it was bad. Like, if I'm hallucinating and thinking that I'm seeing silver dollar-sized spiders on my screen, how in the hell am I going to execute a trade with my family's money, my responsibility, what I'm feeding my family with? How could I do that? Or if I have investors, how could I trade like that for them? Like, that is seriously irresponsible. I know that a lot of people have that attitude where they're trying to trade around the clock and they say, okay, well, I'll sleep when I'm dead. I tried the same thing. I tried that back in 2001, and I did it for a long time. And it affected me. It affected my health. And I take care of myself now. I try to get my 8 hours of sleep. If I'm going to make a financial decision with as much money as I put on my trades, I want to know that I can make these decisions. When I was exhausted, I was angry. I was short-fused, like short-tempered. Like, I would get mad right away. I couldn't process the information. I couldn't comfortably make a decision. And I didn't want to look at other trades or look for other opportunities. I would just stare at one chart. So it affects you. You don't want to do that. If you want to become a true successful trader, you've got to follow these rules and these principles. That's what all of the other professionals are doing. They're controlling their environment. They're controlling their thoughts, their behaviors, their diet, their sleep patterns, all of it. All of it. It's a major financial responsibility to put money in the market and try to make money from those trades. It is a major responsibility. I know I harp on that a lot, but I get that question even this morning. I mean, I get people that will ask me about that, and they want to know how to avoid that behavior, because it really gets a hold of you, especially if you're desperate and you're looking to make money or you've lost a lot of money. The way you're going to earn that money back is by following this plan. Finding the trade, take it to the target, you're done with the trade, and then move on. If you start messing around with the trade and you change the stop loss to the take profit and you give back profits, now you've just made it harder for you to earn back the losses that you came to work to try to put back. By following the plan and knowing that the plan works, that's the first step, right? Having a system in place that works. You have to make sure that you're using something that works. Otherwise, everything that I'm talking about isn't going to make any sense anyway. You got to start there. But if everything works, you got to repeat the plan. You've got to follow the plan and repeat the pattern. So those trades paid 55 pips this morning on the pound dollar, euro dollar, and then we had the pound yen. The pound yen normally pays 250 pips to the final target. We did have a breakdown here, which was a continuation breakout trade, and we traded it, and we held on to up till about the last hour. I was in the chat room a little bit longer than I normally am on a Friday so that I could help my coaching students decide what to do with it as the end of the market, the end of the week was closing out. I don't like holding on to my positions over the weekend. Sometimes you can tell that it's not going to really have any impact and you're going to be safe, but I don't like trying to find out. I don't want to test that. I'm not here to gamble. I want to make money. Sometimes you're going to get that gap, and sometimes the gap will move in your favor. But at this point, I would rather wait for another opportunity to trade this to that 250 pip take profit level later next week and lock in what I already have. So that's what I suggested to everybody. That's what I did. So we earned 91 pips today on this trade here on the pound yen. Now I'm not double counting. You can see that this is the price level from the entry to that target. I'm not double counting or anything like that. If this is going to continue to drop down to that 250 pip take profit level, I'm most likely going to get a second entry opportunity, and I'll look for that on Monday or Tuesday. But right now, I'm done with the trade. I'm out. I recommended that all of my coaching students do the same thing. What was the other one? Euro dollar. Yeah, sorry, euro yen. Euro yen, same thing. The euro yen is a different target here. That's the final target on the continuation breakout trade on the euro yen, 128.58, and it didn't hit that level. And we ended up getting out at 90, I believe. We earned a total of 28 pips on this one from the entry. It wasn't a big trade. I mean, the first target is usually 80 pips, and then 150 pips is down here at 127.70. I'm sorry if I said that was 150. It's not. That's 150. This is the first target. I scale out on these trades. On the euro yen, if I'm trading it to a 150 pip target, I'm scaling out at 80. That's a big trade. 80 pips on a trade is a lot of money. You've got to, like I say this all the time, get paid. You've got to pay yourself. You've got to lock in profits. You've got to have multiple levels that you're scaling out of some of these trades. This is a big move. You have no idea in how long it's going to take and what could happen while that trade is open. You got to get paid. You're here to get paid. You're here to make money. And any amount of time, like if you're spending 8, 9, 10, 12 hours waiting for a setup, and then you're doing everything that you possibly can at the moment that you get that setup to confirm it, and you're doing everything right, well, then you've got to get paid. You're doing the right thing, get paid. You're doing the right thing, get paid. Do it over and over again. That's how you're going to succeed. That's how you're going to stay in this business. So again, 28 pips on the euro yen. So this week we earned a total of 420 pips exactly. No losing positions here. And next week it could be busier, and next week could be slower. We're actually getting closer to Thanksgiving. Sometimes we get some tighter ranges during Thanksgiving in the United States, and then we're also the month after that we've got Christmas and the New Year's. So this is what we're doing here on the euro dollar. It's the end of the week. Markets closed. These dotted lines right here separate the week. So when I stop and I look back, I can pretty much tell where I'm at relative to the open, to the close. Are we trading inside of the previous week's high and low? We can tighten up the charts. How did we trade compared to last week? That kind of thing. So it gives you an idea. I mean, these give you some visual clues of what you could expect, what you could do, what techniques you should probably use, like reversals or breakout trades. How far could you expect to hold on to some of your trades? I did, for those of you who do trade it with me in the chat room, we do trade gold. This is actually gold. MetaTrader platform. There were some breakouts. There were some reversal patterns in here that we traded. This was actually a reversal pattern up here. This was a Tech 1 trade, and we traded and shorted it here earlier in the week, about the middle of the week. And then we had that breakdown, and we were able to earn quite a bit from this one. But knowing that it's running into last week's low, we wanted to lock in some profits. Thank you very much for your time. If you have any questions about anything that I talk about in these videos, send me an email. I'll be more than happy. I mean, I'll take my time and answer you. And if it's something that I think I can't answer in an email because it really requires a video, I'll make you a short video just like this, and I'll walk through some of the questions that you might have, and I'll show you and explain it in a better way so that you can see it in a video, and that video will be like a personal video for you. Thanks again for your time.